Hello and welcome back, guys, to the channel. And on today's video, I'm mainly gonna be speaking about multi-time frame analysis, right? I mean, I see it's this thing, right? Most of the people get wrong, so we want to rectify those and make sure that you guys are on the right side of the market, uh, as many times as possible. But before we get into that, make sure you subscribe, hit that bell button to get notifications for the future content, and let's get into it, right? So in multi-time frame analysis, I've seen people trying to analyze pairs like, from one time frame to another, but they seem to get it wrong, right? Because when you're analyzing a pair, you should do a top-down analysis, right? So how do you do a top-down analysis, right? So a top-down analysis means that you start from the big or higher time frames to the lower time frames, right? But when you're analyzing these time frames, there is a lot of integration of price action that occurs across all time frames, right? Because high time frames can't move without lower time frames, and lower time frames can't move without high time frames. These things correspond to each other, because believe it or not, but everywhere price goes, literally everywhere in these charts that price goes, there is a reason for price to go there, right? So price moves from point, say from point A to from point A to point B, right? And then to point C, right? So this is how price moves, right? So there's a reason in every single move that's happening in here, whether it's in the higher time frame, in the lower time frame, and etc. Right? There's a reason for price to go everywhere in the market. Price doesn't just wake up and move to where it wants to. No, there are people, right? We call them the composite man, or the price, or the smart money, right? The big boys in the market, right, that move price from one point to another with a specific reason and a specific purpose. And once that purpose is done, they can now, they just move it, right? So price moves in a certain manner that everywhere price goes, there's a reason for price to go there, either to go to there or to go from away from there, right? And what you need to know as a day trader, right? I don't care, right? I'm a day trader myself. So whether you're a swing trader, you're a day trader, intraday trader, scalper, whatever, right? You need to know why price is moving from here to here, and why price is moving to here and away from here, right? You need to know those reasons. Now, this video is all about that. Now, let's get into it, right? So in the previous, in the last couple months, we've been speaking about this bearishness on EU, same as GU. So this right here, like yeah, sorry, I was on a call for a minute. Yeah, so we're back in business. Yeah, so as I was saying, right, so in the past few months, we've been talking about this bearishness that we've been having on EU ever since this breaks here, I believe. Yeah, the break here, that retest, and then that continuation to the price action until where we are right now. So this has been happening simultaneously with in company with GBP USD and these pairs that I trade. They're kind of correspondent and divergent to each other, but I'm not going to speak about that. So now heading to the most recent price action, I'm basically going to be talking about this move here, how everything has been happening in here, and how we've spoken about that in both the YouTube and the community with my guys. And also, if you do want to join our premium community, you could DM us on Instagram at official green pips fx, and we'll be more than happy to receive you guys. But so technically we had this break here, right? So from this let's mark out now order flow. So we had a high, a low, a high, a low, right? And then a high. So let's take it from here, a high, and then this low, right? So from the formation of this low right here, from this high, my chart is dirty as shit, as I said, I'm a day trader, so I take like a lot of opportunities in there, but it is what it is. So let's just hide them and keep our charts clear. So the formation of this low from this high led to this breaker structure here, right? So we had a breaker structure here. I'm gonna mark that as a breaker structure. Now from that break, what did we have, right? We go back to our daily roles, right? The same three things, which is structure, S&D, and confirmation, right? SSC, right? So these are the rules, the footprint that we follow each and every day uh, of our trading lives, right? So the first thing is structure, right? So how's structure moving? Structure so far is pushing bearish. Why? Because we are having a break of lows, right? So price comes here, makes that high, and then breaks this low right here. So from that break of the low, we know that, okay, our structural narrative is pushing bearish. So what we're anticipating in terms of structural moves is a certain pullback towards an area in here that's going to lead to a continuation lower with that low as its next liquidity run. That's what we are looking for, and that's the only thing that I've been speaking about um, ever since I joined this channel, right? So, you know, if you do want to understand like literally everything I'm saying in here, make sure you work your way up, right? You start from the first video, you start from the beginning to the end, right? So you just can't watch one video and, you know, like be on the same page with everything that I'm speaking here, right? There's a whole bunch of things that I've been teaching from the past, right? Because it's very hard to teach or speak about everything in a single video. It's impossible, right? So that's why we release these parts, each and every section with its own importance. So the MMC footprint videos are available, all of them in a single playlist, the MMC footprint playlist. So make sure you watch that one. And yeah, so make sure you watch each and every video from the beginning to the end if you do want to learn almost everything that, you know, I've been teaching, you know, and etc. But with that being said, you can also join our premium community if you do want to get the whole premium course as it is. But with that being said, let's continue with video. So this is what we are anticipating, right? When we are at this low. So let's cut this from here. Boom. So from this low here, we're anticipating that price will come up, mitigate some unmitigated price action, and then continue down, right? So that's our structural narrative. Now, okay, let me just clear some of these. Boom. So let's make this a little bit smaller and clear these also. There. So this is what we're having, right? So from this price action, we already know our structural narrative. It's bearish. What's the next thing, right? It's the S&D. It's the supply and demand. Now, since we're in a bearish move, we're going to be looking for supply zones specifically, right? So what kind of supply zones are we looking at? We're looking at the most potential and valid supply zones in which price is going to make that retest or that pullback to in order to mitigate those supply points or supply zones and then continue now with its trend. Now, lo and behold, we did have two major S&D points, right? You can have 2, 3, 4, or whatever, right? So this was our first point, right? So this was our first point of supply. Why? Because this was the final up move before the general down move started, right? So this little white candle in there, and then that continuation bearish. So that was our first supply point. Now the second supply point was here, right? Why? Because we did have a strong up move before the down move, right? So this in itself was our second supply point, right? And so far in, you know, noticing the supply points, make sure you watch the supply and demand videos. They will help you a lot. But you could also use the volume, right? Because at this level of experience, I myself, I can just see the volume straight from the charts, right? So a demand zone or supply zone that was featured with a lot of volume is more likely to hold, right? It's more likely to be valid than the others. So from this area, judging by the price action here, right, you can see this up move, this up candle, right, this white candle in here, and then all this volume, this bullish volume in here that was later on suppressed by bearish volume to take price lower. So it means that that counts as a very valid supply zone. Now, lo and behold, we do also have this right here, not as a supply zone. No, it's just our next liquidity run area, right? So this was the low, right? So from the low here, we know that if price comes we know that if price, let me just use this highlighter, if price comes and mitigates this area here, it's going to fall down to go and take out this liquidity here. Or if price comes here, it's going to come down and take out this liquidity here. So this is our take profit area, right? In a simple sense of view. So yeah, so this were our major anticipations. Now let's let's clear all of that and see what exactly happened in there. So let's now let's just keep coming up. Okay, so let's play price out. Okay, so price now makes that intermediary change towards the our supply points, right? And also for a person using maybe like fibs, right? If you take a fib from there to here, right, from the high to the low, you'll see that our supply points are basically featured at the most important areas of the fib, right? So this is like the 0.5 area, the 50%, and then this is like the 80%, right? The 80%. So you can see how everything corresponds with each other, right? And I did speak about this in that video when I talked about knowing and understanding, right? So I'm not going to speak about that, but if you do want to get into it, you can just go to the playlist and watch it. So I'm gonna clear that, and now let's see what's happening, right? So this comes the section of multi-time frame analysis, right? Because it's what we've been speaking about, right? So from this area here, we know that, okay, so EU is Euro USD is bearish, right? It's generally bearish. That's the overall move that we're expecting from the high time frames, right? But when we do come to the intermediary time frames, because you know, like this is just the 1 hour, it's more intermediary rather than lower, I can say. So when we do come to these intermediary time frames, right, you can see that, okay, so it was moving it was moving bearish from this area here, right, making new lows, and lo and behold, we now have a break, right? So this break here that creates this high, and then that retest, and then that continuation bullish, right? This break again, that retest, and then price is basically going to continue, right? So this is why multi-time frame analysis fits all kinds of traders, right? So from a swing trader, you could just hold from the daily, and you know, just look to, you know, just wait for price to reach here, maybe set an alert on TradingView or something, and then when price reaches here, you can now look for your entry, right? Because I myself, I do use lower time frame confirmation, although that's, you know, it's kind of a personal thing, not a general thing, not a must thing. It's up to you whether to use them or not. You know, just trying to be on the safer side of the market here. But also for a day trader like I myself, right, it doesn't mean that I have to wait for, you know, like all this time here. So this is like what? Okay, what happened there? Okay, sorry for that, my internet just went off, but you know, we're back now. So me being a day trader doesn't mean that I have to wait for all this time for price to move all this distance just to make that pullback in order for me to continue bearish. No, that means being a day trader, I don't have to wait for, this is just 10 days, right? So it's almost like 12 days until price comes to reach here. So I don't have to just sit there waiting for 12 days, not doing anything in the charts just because I'm waiting for a pullback. No. Being a day trader using multi-time frame analysis means that I can now, however, be a part of moves like this, right? So being a day trader shows me that, okay, so now I know that using the high time frames, I know that, okay, price is going to make its pullback to here, right? So being a day trader, I can now start looking for buys up there, right? Or I could use like this as my next take profit area, or even this supply point up here, right? If I'm looking to hold it for a long time. Boom, so there, right? There we now know that price is going to make a pullback. So I could be just, however, sitting now looking for potential buys from this market, right? So as we see, price from this high here makes this low and then comes up and takes out this high with the formation of this high. So now I know that, okay, so a high has been broken. That means that's a change of character, right? Let's delete that. So this right here, this right here is our magnificent change of character. Now from that change of character, I now have a high being put into place and this intermediary low. That means I can now look for what demand zones in here, right? So boom, lo and behold, we do have a fantastic demand zone here that's unmitigated for me to now look for buys in here, right? So now I'm in position to catch buys from here and target this high as the as like my first take profit target, and then like this as my somewhere in between here as my second, and this as my third and last take profit area, right? So now I'm already starting to position myself here, catching my day trades as the type of trader I am, right? Same thing applies. So price breaks this here, makes this high, right? And from that high, we now have what? Demand zones here, right? Demand zones here. That price comes down, price comes down, mitigates, and after that mitigation, price now continues to the top side, right? So this is the beauty of multi-time frame analysis, right? So that means from using the higher time frames to the lower time frames, I can catch as many trades as I want with the perspective of being on the right side of the market, right? Lo and behold, so okay, let's go like to the forward. So let's see what happens next, right? So price, plays around, and boom. So okay, price now comes and touches my my area, right? So this was the supply area, right? That we were looking for sells. Okay, so now that our supply zone has been mitigated, right? This portion of imbalances here has already been mitigated. What's the next price action, right? So from the low that made this high, which is here, right? Boom. So now we have the break of the low, which is a what? Is a change of character. Now from that change of character, we know that okay, so this price is now pushing where? Bearish. So now we start to look for supply zones. Now with looking for supply zones, right? We're looking for the most valid supply zones, right? So we do have one there. We do have the original one up here, but also we do have this intermediary one here, right? The continuation zone here. Now, this is a concept that, okay, sorry for that. I just got another call. So as I was saying, we do have this continuation zone here. Now, this is a thing that I've been speaking about in a while on this channel, right? I did say that if price is moving in a bullish manner, and then we now have a shift, right? We now have a shift, a change of character. Price is more likely to make a slight pullback and then continue, rather than making a deep pullback. Why? Because the momentum or the volume that was used to break this low and change this market character was very strong, right? In a sense of, in a bearish example, right? The bearish pressure here was very strong, that it's very rare to allow a bullish volume to play their part in making a deeper pullback, right? So the probability of making it a slight pullback and then continuing is much higher than making a deep pullback and then continuing, right? So that's exactly what happened here, right? So price now breaks this area here, breaks this low, makes this new low from this high, and then comes back, retraces to this intermediary or continuation zone, right? Just a slight pullback and then continuing down, right? Now I know all of this because I did catch some trades here myself, right? So with that being said, let's play price out and see what happened. Lo and behold, so you can see now price just falls off, right? And catching these cells here, right? So catching these cells here with this low as the next liquidity run area. Lo and behold, that's shit. Okay, so boom, right? So price just takes out that liquidity area, and then it is what it is, right? So this is the overall beauty of multi-time frame analysis, right? So this now shows you how multi-time frame analysis can work, whether you're a day trader, a scalper, an intraday trader, or whatever kind of trader you are, right? So everything is packed within multi-time frame analysis, and this is something that I will talk about in the next 3-4 videos, right? So with that being said, make sure you like the video if you did like the video, and if you didn't like the video, let me know why in the comment section. In the partnership of that, make sure you subscribe, turn that bell button on for future notifications, and Until the next one, guys, stay safe and